inside bar, engulfing candles, pin bars. I also do look at the low and highs of candles. So the other thing, other than the three which I've mentioned, the other thing which I look at is such as levels. So as much as I'm focusing so much on pin bars, engulfing candles, or maybe inside bar candles, all those do make a lot of sense if they happen at the correct place. So the fact that a candle is an engulfing candle is not a sign that you're supposed to enter that trade, or you're supposed to use that candle to enter trades. You have to wait for certain things to happen. The engulfing candles you're looking at, the inside bar candle you're looking at, must all be within a given context. So I hope that makes sense. That's the first step toward understanding inside bar candles. The best way is to ensure that the inside bar candle you are looking at is actually happening around a clear level. So that level may be a support, that level may be a resistance level, that level may be a resistance trend line, that level may be a support trend line. So let me start by first defining what an inside bar is, since that's the main thing we're going to look at today. So let me remove this first. Let me minimize my screen. So I'm going to delete the blue line you're seeing there. That is the line graph. I'll delete it. I'll remove it temporarily. So assuming you have one big candle like the one I'm drawing on the screen now. Assuming you have a candle like this, it's green in color, of course, and then you have this candle having a big tail. So from the normal definition, this is the opening price and this is the closing price. This is the low of that candle and this is the high of that candle. So if the next candle which should open at the closing price of this candle, it opens somewhere here, the next candle now opens there, then instead of being green, instead of this candle being green, it ends up red. So you have the previous candle being it is very big and very huge. Like this. So if you have anything which looks like this, that's the previous candle is green in color, very big, it opened here, closed somewhere here, this is the lowest low of this candle and this is the high of this candle. If the next candle opens just around the same price where the previous one closed, or opened below the previous candle, then goes as low as this point, as high as this point, but ends up closing below, that is, it is pretty much inside the previous candle, then this candle is said to be inside the previous candle. So the definition of an inside bar candle is actually the exact opposite of an engulfing candle. Whenever you have a candle which looks like this, or a pattern which looks like this is known as the bullish inside bar candle. The red candle is known as the bullish inside bar candle. So we write that bullish inside bar candle. This is known as the bullish inside bar candle. So whenever you see a pattern which looks like this, the previous candle is bigger compared to the current one, and the high of this candle is lower than the high of the previous one. The low of this candle is higher than the low of the previous one, and the body size of this candle, which is the most important thing, is actually inside the body size of the previous one. Then this candle is known as the bullish inside bar candle. So what it simply means is that the next few candles, we may see price continue up. Whenever you see an arrangement like this, what it simply means is that the next few candles may likely continue to the upper side. So if you see something like this, if you had a candle which looked like this, then just know that in the next few candles, we do expect price to continue to the upper side. So just before I add more things to this, let me give you just a brief overview of how you're supposed to be entering trades when you see this setup. Okay, whenever you see this, do not just get into a trade immediately. When this candle closes, don't just enter trade immediately. This happens. No. Do not enter trades immediately you realize this is an inside bar candle. Instead, place a pending buy limit within half the previous one, half the bigger candle. So if you have the bigger candle being this, the high is here, the low is there, calculate between the high and the low, find the difference. Then the middle is where you place the pending buy limit. So when you have the pending buy limit order at this price, in this case this is like 1.30450, this is not the correct price though. This is not the actual price. This is just like we want just to find the price of the middle and of the middle of this candle. So have a pending buy limit here. Have your stop loss below the low of this candle, and then have your take profit at the high of this candle. So okay. Somebody may say that this is too early. You are taking profits very early. No, it's not early. It's actually almost a guarantee that the price may attempt to go above this high. So that's why I'm saying you're supposed to take profit at the high of this candle. If you want to be more generous with the trades, then the take profit should be at least the same distance as the size of the bigger candle. So that means that if you had something like this, your take profit needs to be at least the size of the bigger candle, like this. So if you pick a buy here, if you have a pending buy limit here, and that buy limit has been triggered, just expect that the price may likely hit this level. The highest we want it to go up to is actually the top, which is, in this case, this is 1.30633. Does that make some sense? Do you understand exactly whatever I'm saying? That whenever you see an inside bar candle, do not find yourself entering trades immediately. Don't just enter trades because this is an inside bar candle. No. Instead, have a pending buy limit within the half this candle. So you calculate the high and the low, then you find the difference. Then in the middle, place the pending buy limit. Have your stop loss below the low of this candle. Then have a guaranteed take profit almost at this price. So if you are more generous, as I've mentioned, your take profit needs to be at least the same size as the size of the mother candle, which is this one. So if you buy it here, have your stop loss at this price. So some people may also calculate like this. You may want to have the take profit at the body size, but you calculate it from this price. So that would mean that the take profit is actually somewhere here, which is still correct. That is still correct. These are some of the ways you can be placing multiple take profits. So you have your first take profit there, you have your next take profit there, and then the third take profit is actually when the price now goes beyond, which is here. This is how some people also place the take profit. This is how someone may calculate the take profit. If you want to have 3 take profits, then that is one way you can calculate it. But just know that the first take profit is at the high of this candle, the next take profit is at the half of that candle, then the next take profit is complete of that candle, so the entire body size from the high. So I hope that makes sense. So the next candle I want us to look at is bearish inside bar candle. So bearish inside bar candle is exactly opposite the candle we've just looked at. Bearish, we'll write that down, bearish. So bearish is opposite, which means this candle we are seeing as green needs to be red. Yes, the green needs to be red and the red needs to be green. So look at this candle, look at the candles we have just drawn now. So you can basically see that it's exactly opposite the previous candle, the bullish inside bar candle. Assuming you have a candle like this, you have a setup which looks like this. You have a big red candle which opened here, closed somewhere here. It went as low as this price, but it ended up going as high as this price before closing at this price here. So what we expect to be happening, we expect that the next candle, which is now this one, should open around the same price, go slightly to the lower side, but ends up closing above. So this becomes the inside bar candle, specifically inside bearish bar candle. And what it means is that the price may likely continue to the lower side. So whenever you see an arrangement like this, just know that the next few candles, we expect price to proceed to the lower side. This is what we expect to be happening. So whenever you see something like this, we expect the next few candles to actually continue to the lower side. So how do you trade this? First of all, let's define it. For you to say that this is a bearish inside bar candle, you look at the high and the low, the high and the low, and the body size of this candle and the body size of the previous candle. So if the high of this candle is lower than the high of the previous one, the low of this candle is higher than the low of the previous one, and the body size of this candle is smaller compared to the body size of the previous one. And then the body size of this candle, the body itself, is actually inside the body of the previous one. Then this becomes a bearish inside bar candle. And as I've said, what that simply means is that we are heading to the lower side. So the first thing you want to do is you want to identify the high and the low of the previous one. Then you find the middle of this candle. So the middle is actually inside this and this. So we'll do it somewhere there. So you have a high, you have a low, you have the middle of this candle. So as I mentioned with the bullish inside bar candle, with the bearish inside bar candle, you need to have a pending sell limit at this price. Have your pending sell limit. At all cases, your stop loss needs to be above this high. So the first thing you want to do is to calculate the difference, like find the distance between this point and this point. You can draw a line like the one I'm drawing now. So this will help us find the correct places to have our take profit. So we have these two lines. We have those two lines. We'll add another one so that there are three, because we want three take profits. So whenever you enter a trade here, when you have a pending sell limit at this price, your first take profit needs to be fixed at this point. This is like, it's almost guaranteed that if the price pulls back up to this point, we are likely going to see a test of this level. So when the price pulls back up to this point, pick a sell position, but have your first take profit at this price. Then the next take profit is based on the size of the previous one, which means if you sell off at this price, expect price to break below this level. That's the first place it needs to reach is this one. Then you take maybe portion of your lot size, you step out, you leave the rest up to the next take profit, which is here. Then the next take profit should be based on this high. So from this distance, this point, up to this level. So you can see we had the first take profit, we had the next take profit, and then we have the last take profit, which is at this price here. So in all these cases, your stop loss needs to be fixed at the high of this candle. Does this make sense? Whatever I'm saying, does it make sense? So it should make a lot of sense, because if you practice it like this, you'll be able to get at least very, very, very good trades with time. You will be able to see that when the price actually gives you a clear signal, it's always a very good signal. Are we on the same page? So you'll sell it, your first take profit, your next take profit, and then the next one is here. So one last thing which I want to mention is that I've mentioned that although I trade pin bars and inside bar candles, it's only always important if that pin bar or inside bar candle is happening around a clear level. That's when it makes sense. If you have, maybe assuming you have, like, this is an inside bar candle, then the previous candle was actually breaking below a significant level. That is, this candle here, the bigger one, maybe this level, this was a support. So when you have a very good level, then the price has broken below this level, then the next candle, which opens here, tries to go up, but does not break beyond this level. Instead, it ends up being an inside bar candle. Then this is always the correct time to use the inside bar as a strategy. So whenever you have a clear level, the price goes above or below that level, then the following candle ends up being an inside bar candle, then that is always the correct time to look for a trade on inside bar. That's, if you want to trade inside bar candles, trade only when the previous candle was actually breaking above or below a level. That's the correct time when, if you enter trades at that time, it becomes much more profitable than if you enter trades at any other time. So inside bar alone is not enough. You can't trade just inside bar alone. Just because it's an inside bar does not mean it's the correct time to be trading inside bars. An inside bar must happen within a given context. So when you see an inside bar, check and confirm that the previous candle was actually breaking beyond a significant level. That is when you're supposed to use it for an entry. So I want to explain, let's look at the last point in a real chart so that we see what that stands for. We have this. I'm going to delete all this, the things we've done on our chart. I hope whatever I've said so far makes some good sense. So look at this chart. Look at from this point up to where the price is now. There is this upward move. We have an upward move, upward move, upward move, upward move. Then look at this. There is this big candle which opened here and closed somewhere here. It went as low as this price, but ended up closing at this price. So if this candle becomes the mother candle, the following candle is like inside the previous candle. It is, if you look at it properly, you can see that we are inside the previous candle in all aspects: the high, the low, the body size. So as I've said, you'll mark this. This is the best place to have the stop loss, and this is the correct place to have, not this is the stop loss, yes, this is the low. Then you find the middle of this candle, which is this, somewhere around this price. So after closing, and you've seen that this is actually an inside bar candle, you now place your pending sell limit at this price, have your stop loss at this price, and the first take profit is here. So you can see that if you had it like that, the price actually went up to your take profit. It took your take profit, the first one, which was here, the next one, which was here, and the last one, which was here. All of them have been taken out. So you had like 3 consecutive successful trades. That's what I'm talking about. So you need to identify this as an inside bar candle, identify the previous one, get the high of it, get the low of it, get the middle of that candle, which is the entry, and then you place your take profit as I've said. So the next candle, which should now explain the idea which I've said, that the price, it should be happening within a given context. Just look at this. We have a support here. We have a support there. This is a support. There's this break of the price, open here and closed below. So this is what I'm saying, that the inside bar must happen within a given context. After this close, The next candle tried coming as high as this point, but ended up closing below. So if we were trading this, most probably we could not have entered the trade because the price has not gone up to the half of this candle. But if the price would have gone to the half of that candle, which could be somewhere here, then you can see what has happened. The price technically has gone our way massively. If the price could have retraced back up to this point, then that could have been the correct place to look for a sell from. You can still see that we are still bearish. The price is still continuing downwards. So technically, this is how I look at inside bar candles. That's how I trade inside bar candles. There are no greater secrets than the ones which I've mentioned. It must happen within a given context. Then it's better if you're looking at the trend also. So if the price breaks above a level and we're in an uptrend, and then the inside bar happens after that, look for buy positions. If the price breaks below a level while we are in a downtrend trend, then an inside bar happens after that breakout, then keep looking for sell positions. So thank you very much. That should bring us to the end of today's session. I will meet again next week at the same time. So thank you. See you.